from the heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, a deadly collapse at an Amazon warehouse puts a spotlight on the company's cell phone ban. Now a federal investigation has been launched. We will have all the details. Plus, Apple's biggest one-day decline in 3 weeks. Now that $3 trillion market cap looking a bit farther away. Will we see it in 2021? We'll debate. And just like that, Peloton responds faster than Carrie Bradshaw. How the connected fitness giant is firing back with a Sex and the City spoiler. We'll get to that in a moment, but first let's get a look at the markets. The week starting with tech stocks leading declines and crypto taking a hit. Our Ed Ludlow here with the latest. Ed, take it away.
Yeah, I don't want to bring the mood down on a Monday, but we're really in risk aversion mode. You can see all that red on the screen. The NASDAQ 100, that really tech-heavy index, down 1.5%, the most in around 10 days. And really, the biggest pressure was on the mega cap tech stocks. You see that reflected in the NYSE FANG Plus index, down 2.7%. Big names like Apple, of course. Apple $3 trillion, not quite on Monday, I'm afraid, Emily. And semiconductors getting in on the act, down 2.5% as well. This is a really big week. We're going to hear from actually 20 central banks around the world, but the ones that we're really looking out for, of course, are the Federal Reserve on Wednesday, the Bank of England and the European Central Bank on Thursday, as well as the Bank of Japan later in the week. This is going to set the stage for 2022 on global inflation, the global outlook for monetary policy. And of course, if you're an equity market investor, a cryptocurrency investor, you're going to be paying attention for the commentary and the signals of what's to come. And speaking of inflation, which will be one of the top topics, I want to talk a little bit about Bitcoin, because after a pretty solid weekend, it's been a heavy selling session for Bitcoin on Monday. We're now down below $47,000, and we're hovering around Bitcoin's 200-day moving average, which is $46,720 per token. We've kind of been monitoring that as a key technical level where we could either see a bounce back or see continued declines. But again, there was this idea that Bitcoin's an inflation hedge. Well, inflation's pretty high globally, and no one's really buying Bitcoin, it seems. Fine, let's look at some of those specific stock movers. Curiously, one mega cap tech stock up big on Monday, Meta, the Facebook parent. Not sure why, but it's having a pretty decent day compared to its peers. You can see Tesla down 5%, Apple nowhere near $3 trillion, not happening on Monday, and Amazon also down 1.5%, under pressure as well. Emily.
All right, Ed, thanks much. Meantime, an Amazon warehouse collapse that killed at least 6 people after a tornado ripped through Edwardsville, Illinois Friday has amplified concerns about the company's mobile phone ban on the warehouse floor. Amazon workers say the incident highlights the need to access their personal devices in emergencies and to get important updates like severe weather alerts, for example. The company had relaxed its phone ban during the pandemic, but that has slowly returned. Bloomberg's Spencer Soper, who covers Amazon, is with us, along with PacView CEO Melissa Burdick, a longtime former Amazon employee as well. Spencer, you actually just broke some news that Amazon is now considering pausing this phone ban as a result of what happened in Illinois. What can you tell us?
Yeah, so this has been moving really quickly. And what we know is that Amazon's plan was to resume this phone ban in January. You know, this had been relaxed through the pandemic. They'd had this ban for years previously. They relaxed it through the pandemic because people needed to, get important updates. And it was scheduled to go back into effect in January. And what we were told is that, from multiple people in different facilities in different states, was that some managers were actually resuming the ban already. But once this tornado hit and, people were trapped in a collapsed building, that really amplified concerns among employees just about having access to their smartphones, not only to keep in touch with family and loved ones in cases of emergency, but also to get important weather alerts and make their own decisions about whether they want to remain in these big buildings or try to go somewhere that might be safer.
We also know now that OSHA is investigating. They've had investigators on the scene since Saturday. Do we know that in this particular warehouse, whether or not workers could use their cell phones or not, or did they have to check them at security like they have had to in the past?
So Amazon's saying that the policy right now today is still that all employees and drivers can have access to their phones, and we don't have anything indicating that workers at this particular facility didn't have their phones. OSHA is investigating, which is to be expected. 6 people died in a workplace, and it could be months before we hear anything back from them. What they're going to be looking for is what kind of training did Amazon do about tornado risk, what kind of shelter area did they provide. These buildings are big and wide open, and so they generally are engineered with some area that's beefed up structurally where people can duck for cover in a tornado, which looks like happened in this case. But I imagine OSHA is going to be checking to see how prepared they were for such an emergency.
Melissa, what's your take on this story as someone who worked at Amazon for many years? Obviously, this is a devastating tragedy. It seems to be still unclear, the exact details of what employees had access to on the ground. But what do you make of this?
Yeah, I mean, it's first of all just a terrible thing that happened, and in terms of what I make of it, I'm sure that Amazon will restructure policies. They'll take a deep dive into what happened and how they can improve things for go forward. Obviously, they would not have wanted this to happen, and so this might change policies for the better.
Spencer, Jeff Bezos did tweet earlier saying the news from Edwardsville is tragic. We're heartbroken over the loss of our teammates there, and our thoughts and prayers are with their families and loved ones. That same day, he's getting criticism. He was celebrating another successful Blue Origin flight. What else is Amazon saying about what happened here and the criticism about what more they possibly could have done?
It's still pretty early on that note. I mean, there have been tweets from different executives, the obligatory thoughts and prayers tweets from different executives. Some workers have said that, they obviously had to close the facility. There's another facility across the street that they had to close just to provide access to the parking lot for emergency crews because there was such a big response. There was access to counseling services from some of the employees nearby that I've talked to. And they made this commitment to support. There was actually a press briefing over the weekend with the Illinois governor, and they mentioned that. And there wasn't a lot of clarity around that, but Governor Pritzker in Illinois was just saying we hope that they follow through on that. And
you've been talking to workers, Spencer. What are they saying to you about their fears about not being able to use their phones, whether or not it's in an emergency like this or on a regular basis?
Well, there's just a lot of distrust. Workers will say, maybe something happened to their kid at school. This is back when the ban was in place, and it could take hours for someone to call that warehouse and get a message to this person. So it's really not designed for people to get critical information from the outside world, which is why the employees, feel like their phones are so valuable, and all this, to them. And all this situation has done is reiterated that, especially with like critical weather alerts and that sort of thing. Workers don't necessarily trust Amazon to keep them informed about the risks outside, and they prefer to, have direct access to that information and make their own decisions for their own safety.
All of this happening against the backdrop of some Amazon workers in parts of the country trying to unionize, Melissa, which I assume would give them some more control over issues like this. I mean, do you think that Amazon workers, especially warehouse workers, should be part of unions, that would better help protect their rights?
I think that the workers in general just need to make sure that they can be safe and work in a safe environment. Is it unions? Is it Amazon being more responsive? I mean, there's a shortage of workers in general. So if Amazon and other places want to keep people, they're going to have to improve policies to be able to retain and make sure that they're safe. So whatever that mechanism is, that's what's going to need to happen. And right now, workers have a lot of power because there's not enough of them. So hopefully, think policies will change for the better in general for these guys, for these folks.
And, in your experience, do you believe that the criticism of Amazon and how it treats its workers is fair? I mean, this is a company that, is focused, it sounds like, they say they're focused, almost exclusively on customer happiness. But what about worker happiness? Do you believe that Amazon focuses on that enough? Melissa?
Oh, sorry. Not being on camera, I can't see you. You know, that's a really hard one to say, not being an actual worker, not being in the position of their shoes to understand the day in, day out of, you know, how well people are being treated. But, you know, like I said, I think that times are changing. You know, there's been a lot of information about Amazon increasing people's compensation because it's harder to attract them, but they're also going to have to treat them, make people feel safe and happy in their environment. So, you know, without having walked in their shoes, it's really tough to answer that question. But, you know, that's just through public outcry that we can hear these things.
All right. Well, certainly our hearts go out to all of those workers and their families. Melissa Burdick of PacView, former longtime Amazon employee, and Bloomberg Spencer Soper, who covers Amazon for us. Spencer, we're going to continue to watch your reporting. Meantime, Time Magazine has named Elon Musk its Person of the Year. The publication wrote that few people have had more influence than Musk on life on Earth and potentially life off Earth as well. The announcement caps a run in which Musk solidified his standing as the world's richest person and turned his one-time electric car startup into a $1 trillion company. Coming up, Apple's run to $3 trillion. Stock market value falling short. Shares down. When will the company hit that historic valuation? Will it? We'll discuss next. This is Bloomberg.
Apple has released iOS 15.2, bringing new features like nude image detection in messages for iPhones operated by kids, new privacy features, as well as a new mechanism to hand off your data in the event of your death. The new feature in messages, of course, is the most controversial. It was planned to launch earlier this year, but it was delayed after privacy experts complained about a companion feature that scanned user iCloud photo libraries for CSAM or child abuse images. The latter feature is still on hold, but the messages feature will blur or prevent any incoming or outgoing nude images as long as the child's parent opts in via the family sharing menu in settings. Other new features include the app privacy report. That lets you see which hardware features like the camera, microphone, or the network different third-party and first-party apps are accessing. There's also a new toggle that prevents the iPhone 13 camera from automatically kicking into macro mode when you bring the iPhone close to an object while in the camera. You can also now send emails from a random address if you subscribe to iCloud, and there's a new option for setting a digital legacy contact. However, the best new feature in my opinion is the new design for notification summaries on the lock screen. I'm Mark Gurman, this is Power On.
You can subscribe to Mark's weekly Power On newsletter at Bloomberg.com. All right, let's stick with Apple. The tech giant turning lower Monday as the $3 trillion market cap continues to be elusive. Tom Forte of D.A. Davidson joins us now to discuss. Tom, is it going to happen before the end of the year or not?
Well, I think it could happen before the end of the year. What I find so fascinating about Apple's march to $3 trillion is I think investors are basically putting an embedded call option in Apple that they're going to come out with either an electronic vehicle and or devices to enable consumers for augmented reality and virtual reality. So it's this embedded call option, investors' willingness to bet on products Apple hasn't even announced yet, that I think is driving the run to $3 trillion.
Well, and they not only haven't announced these products yet, but multiple car executives have been leaving. I mean, how confident are you that they will fulfill these big car ambitions?
Over an extended period of time, so if you ask me over the next 3 years, do I think Apple's going to launch an electronic vehicle? I would say I have a high degree of confidence, but if you ask me over the next 12 months, less so. I do think, to your point, there's been a lot of stories about executives coming and going from Apple that are supposed to start this electronic vehicle effort. I think at one point they may have called it, Project Titan or something like that. But it is interesting to me that investors at this point in time are willing to bet on products that Apple has not even formally launched.
Interesting that you are confident that they will launch an electric car offering at least in the next 3 years. Meantime, we're seeing Apple's price to sales ratio climbing. Why doesn't that make it a less attractive stock like it would traditionally? I mean, is Apple really a bargain buy at the moment?
Excellent question. And if you looked at Apple, like other value consumer technology names, there were times it traded at north of a 10% free cash flow yield, and it was extremely valuation attractive. Less so today. The other thing that I find so interesting is on the March to 3000, I think it's less about iPhones. So in my opinion, when it hit in August 2020, 2 trillion, that was on investor enthusiasm for a multi-year upgrade cycle with 5G networks. So I do think that right now, by historical measures, Apple's less attractive as far as low PE or high free cash flow yield, things of that nature. So it is interesting in that regard.
All right, Tom, we'll see if your predictions hold true. Appreciate you putting some meat on the bones for us. Thank you, Tom Forte of D.A. Davidson. Coming up, the demand for even faster grocery delivery continuing to rise. After the break, I'm going to speak with the co-founder of GoPuff, the delivery service that promises to have your order to you in as little as 30 minutes. Plus, just like that, he's back. Peloton's lightning fast response to a storyline twist in the Sex and the City reboot. That's still to come. This is Bloomberg. How fast can you get it to me? That is the question so many companies are asking themselves now. GoPuff, a delivery service that aims for minutes, not hours, is becoming the standard. The service available in more than 1,000 cities across the U.S. and Europe since launching in 2013. Joining me now, Rafael Elishayev, the co-founder and co-CEO of GoPuff. Rafael, good to have you with us. So it has been a huge year in the delivery market in general, and rapid seems to be what everybody wants and aspires to now. What have been your top takeaways about what customers want and what they're willing to pay up for?
Emily, first of all, thanks so much for having me. Really, really excited to be here. I mean, 2020 and 2021 was a year of learning. We continued to experiment with the things that customers want most. We've been very, very aggressive on expanding to new geographic areas. So in the last 12 months, we actually opened up more square footage than we in the last 3 years combined together. So we've been really, really focused and really listening to our customers. One new business that we've launched is this GoPuff Kitchens business. It's an exciting new venture where we actually build kitchens inside of our micro-fulfillment centers and deliver hot pizza, milkshakes, breakfast sandwiches, tacos, all to customers alongside our regular 4,000 SKUs, all in a record time. We've launched all over the US. We're now in New York City, Los Angeles, and really pressing the accelerator into UK and France as well, where we've seen some really, really tremendous growth over the last couple of weeks. Just this week alone, we've grown 100% week over week in the UK market, and really, really excited to bring the service there as well.
DoorDash is now offering 15-minute delivery in certain markets. How much are you willing to spend to compete?
You know, Emily, it's been 8 years since we created this instant needs category, right? And we started this business in a pretty unorthodox way. So for the first 2.5 years, we didn't really raise any money. So we really focused on nailing the business model before really scaling it. And over the last 8 years, as we continue to scale that business model, we built a lot of really strong competitive moats. We build world-class technology inside of our micro-fulfillment centers to operate all these buildings, really, really strong infrastructure all over the country, hundreds and hundreds of liquor licenses. And the reality is that this is a very, very difficult business to scale. It's very, very operationally intensive. It's inventory intensive and it's capital intensive. And it's the only things that we're focused on. So if you look at the data, right, today, GoPuff has 75% market share dominance here in the US. As I mentioned earlier, what we're doing in Europe is we're really playing to be the #1 player there as well. So we're continuing to assert our market dominance here in the US by widening the gap to having more than 75% share. We're really focused on having that same #1 position in Europe as well.
So DoorDash, we just saw them adding employees for this super fast delivery service that they are now offering. You compete with DoorDash and Uber and Lyft and a number of different gig economy companies, Instacart for drivers. How are you thinking about the independent contractor model and if that's really sustainable over the longer term?
You know, we really focus on the driver partner, right? We start with the driver partner. We really listen to them. We survey and talk to all of our driver partners and see exactly what they want and what they don't want. And the reality is GoPuff is in a very, very unique position. It's very rare that you have an environment where you have driver partners that can apply to work inside of your micro-fulfillment centers as full W-2 employees or stay driver partners in our regular network. So if you look at the data, you know, our drivers are making $18 to $25 an hour. When we're interviewing these drivers, they're telling us that the vast majority of them are saying that we want to stay flexible, we want to stay independent contractors, and the ones that don't want to start a career within GoPuff could start working within our micro-fulfillment centers and become W-2 employees.
Rafael, it's been reported you're talking to bankers about going public, that you're getting close to selecting one. Should we expect to see GoPuff go public in 2022?
No, Emily, I'd love to talk about going public. You'll be the first one to know. I'll give you a call when we're ready to talk about it. What I could tell you right now is we're ultra focused on the customer. We're ultra focused on making sure GoPuff's magic is delivered throughout the U.S., throughout Europe, really kind of embracing the magic all over the country and within Europe, and really focusing on our customer.
All right, I'm going to hold you to that. I'm expecting my phone call in the near future. You have done some small M&A. Could we see you do bigger deals?
You know, I think there's definitely going to be consolidation in the space, right? Like when you create an industry and, you know, the business starts going in the right direction, customers really like it. Clearly, people are going to follow and want to do it. And while I think there's going to be consolidation in this space, I think a lot of the players that are getting into this instant needs category are not realizing how actually operationally difficult this business is. So while there's going to be some consolidation, I think there's going to be also a lot of players that just won't exist in the next 12 to 18 months.
All right. Rafael Ilyashayev, co-founder and co-CEO of GoPuff. Good to have you with us. We'll be watching you over the weeks and months ahead. Thank you. Coming up, 2021, a record year for tech mergers. We're going to talk with Ted Smith from Union Square Advisors about M&A activity this year and what to expect next year. And make sure you tune in tomorrow. I'm going to be speaking exclusively with Uber CEO Dara Khosrowshahi. Catch that conversation 1 p.m. Wall Street time, 10 a.m. here on the West Coast. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. There were some full throttle moves in EV-related stocks. Ed Ludlow here with more. Ed, take it away.
Well, I want to talk about motorbikes. We never talk about motorbikes, but Harley-Davidson shares Absolutely Motoring on Monday. They're going to spin off their electric motorcycle unit as part of a reverse merger with a SPAC, of course. And you can see the shares absolutely popping at the open. They actually hit the brakes a little bit, closing up 5% on Monday, but still a significant gain. This is Livewire, the electric motorbike unit, and it's going to be with a SPAC called AEA Bridges Impact, valuing the joint entity just below $2 billion, raising $545 million to help those electrification efforts, and Harley-Davidson gets to retain a 74% stake. So really interesting to see that EV first mover advantage in the motorbike space. And speaking of SPACs, I'm also looking at Lucid, up 4% on Monday, on a time where a lot of stocks are selling off, right? A lot of pressure. But in Lucid's case, news on Friday that the stock will be added to the NASDAQ 100 as part of the index's annual reconstitution. Of course, the NASDAQ 100 is made up of the 100 and more most valuable non-financial stocks. And a lot of the time, that means very valuable tech stocks. So it's certainly going to be one that we watch going forward. And at the other end of the spectrum, we have Tesla. Tesla selling off in a really big way, down 5% on Monday. It's actually down more than 20% since that November 4th high of $1,229.91. So it's in a technical bear market. It's really suffered along with other growth and momentum stocks. Not much in the way of specific news, although interestingly, Cathie Wood's ARK did sell 28,000 shares of Tesla on Friday. Elon Musk tweeting again on Monday saying that SpaceX has a new project to take CO2 out of the atmosphere, turn it into rocket fuel. And what a year that guy's had, really rocketing. And by the way, Emily, on Monday, Elon Musk named Time Magazine's Person of the Year 2021. Any surprises?
And well, he's keeping it up with those tweets and the revelations that come with them. Thank you, Ed, for that. Well, from Intuit and MailChimp, Norton and Avast to Microsoft and Nuance, as 2021 heads to a close, mergers and acquisitions have been booming this year in tech. This, even as the Biden administration strengthens its stance on antitrust and pushes back against big tech. I want to talk about it all with Ted Smith, president of Union Square Advisors. Ted, are you expecting more M&A in the year to come?
We absolutely are, Emily. And first of all, thanks a lot for having me back on. It's been a record year for technology mergers and acquisitions. Frankly, we're closing in on $1 trillion of M&A activity for TMT for 2021. We're over $900 billion at this point, so we're up better than 50% over last year, and we really see that continuing well into 2022 at this point.
What about those that failed, Five9 and Zoom? Or there was a Bloomberg report that PayPal tried to buy Pinterest. And then there's NVIDIA and ARM, which still hasn't happened yet.
There's always going to be in this market questions of some deals will not happen even after they get announced for a variety of reasons. You mentioned NVIDIA and ARM, obviously the regulatory questions that abound there. The transaction around Zoom and Five9 was really a structural one as the stocks moved in different directions, and ultimately it was a vote by the shareholders on both sides that wasn't a transaction that they wanted to see happen. But even when you take all of those in total relative to the number of deals that got done, it's a very small percentage. This has been a very welcoming environment for M&A overall, and as a result, as I mentioned before, we continue to see that likely to be the case in 2022.
What is so welcoming about it, and why do you expect those trends to continue?
First of all, there's just a tremendous amount of capital available, both at the corporate level as well as in private equity firms that have come to really play a significant role in the M&A landscape in the technology space. They have tremendous buying power. They continue to consolidate their portfolios around larger and larger transactions. They're keeping those companies in their portfolios private longer and longer, so they're growing in size such that if they do ultimately come public, they are very large IPOs. But the capital that's available, again, at those corporate and private equity firms, and certainly all of the additional firms that are part of the ecosystem, venture capital, growth equity capital, there's never been more capital available. And so the view is that the market continues to pay for growth, and that one of the best ways that the existing companies that are out there can get growth is to acquire it as opposed to build it. And that mentality has permeated all of or much of the tech M&A landscape over the last couple of years, and we think, again, will continue to do so.
What about regulatory issues, not just in the United States, but on other parts of the world? In Europe, for example, Facebook and Giphy, not sure if that's going to happen.
Right.
There's Microsoft and Nuance, a British antitrust regulator looking into that. And there is massive scrutiny of big tech going on around the world, especially of companies like Facebook, or I should say Meta and Alphabet and Apple and Amazon.
Right. So I think a couple things to break down there. First of all, the UK is obviously, asserting its view on some of these mergers in ways that, frankly, it has never done before. So that's an unknown, and we're going to have to watch that a little bit as we go into 2022. But I still think that will be dramatically the exception and not the rule as we look at a number of those transactions. More to the point, the FANG stocks or Meta, Apple, Amazon, et cetera, even though they represent enormous amounts of market capitalization today, and certainly cannot be ignored on the tech landscape, the overall amount of M&A that they're driving relative to that nearly $1 trillion of M&A that we got done this year is actually very small. And so even if the regulatory regime of the US government gets tighter on those various companies, we still don't think that's going to stymie the M&A environment for basically all of those that are well below the line. Sorry, go ahead.
Well, so specifically, I was going to ask, what do you think the approach the Biden administration is going to take will be, given that we're going into a midterm election year and big tech scrutiny seems to be something that both Republicans and Democrats align on?
I think we'll continue to see that. I think the largest companies, the ones that we've just mentioned here, are going to find it more difficult to get large M&A deals done. They've always taken the approach of asking for forgiveness rather than for permission on those things, and I think we'll continue to see that. But I also think they're mindful of the current stance by the Biden administration. And so we'll see a little bit less M&A from them. And some of the M&A they may want to do, they simply may not be able to do from a regulatory perspective. So I think that'll be tougher for the largest companies. But again, for the vast majority of companies that want to acquire, we don't see the current stance from the Biden administration as being punitive at all.
All right, Union Square Advisors President Ted Smith, appreciate you taking the time. We'll see if your predictions ring true. Coming up, from engineer to CEO, we're going to speak with the CEO of Okta and former head of engineering at Salesforce, Todd McKinnon, about the recent rise of CTOs turned CEOs. Next, this is Bloomberg. Binance has withdrawn a request to open a cryptocurrency exchange in Singapore. That ends an effort that started last year. We spoke with the CEO of Binance on Bloomberg earlier.
We're not that disappointed. This is the original plan. So we just invested in a local regulated exchange called XG. We usually call it XGX. So this is, then we'll have two duplicate things in the run for a small market. So Singapore is a very advanced market and is very pro-crypto. We just didn't think we need both applications there, and it's kind of heavy.
Binance also will wind down its digital payment token business in Singapore. Meantime, this year has seen a game of executive musical chairs with a wave of newcomers bringing in a technical background. From Salesforce's new co-CEO Bret Taylor, who started out as a software engineer and was, of course, CTO of Facebook, to Jack Dorsey's departure from Twitter with its CTO taking over as CEO. I want to talk about that more with Todd McKinnon, CEO and co-founder of Okta, who worked at Salesforce for many years before co-founding Okta. Todd, great to have you back with us. I'm so curious what you think about this Bret Taylor news. He's now co-CEO with Mark Benioff. Does this make sense to you?
It's great to be on Bloomberg Technology, Emily. Thanks for having me. I think it's great for Salesforce, and it's great for Bret, and it's great for Mark. You get a world-class technologist and product person in Bret. And we all know what Mark is. He's legendary in terms of leading the company and vision and evangelizing all the latest, greatest technology. It's a killer combination. And I think as Salesforce thinks about what it's going to do in the decade ahead, as it's going to continue its product evolution and its architecture, it's amazing to have Bret in that seat.
Let's not forget, Salesforce had a co-CEO before, Keith Block. It didn't work out. Why do you think chances are better this time? And do you think this paves the way for Benioff to eventually make an exit?
I think Mark has said this as well. I can't imagine Salesforce without Mark. He created the company, he's grown it, he'll be there forever. And I wouldn't say it didn't work out with Keith. I mean, they were pretty successful with Keith in that seat. So I think this is just the next evolution of it. When you look at the company, the scale they're operating at, the latest quarter was over $6 billion in revenue. They have a lot of sales to do. They have a lot of marketing. They have a lot of positioning. They have a lot of product and technology to build. And having Bret and Mark in the CEO seats is an amazing combination to do that.
Okay, but the Keith Block thing didn't last more than a couple of years. We'll see how long this one lasts. I hear you. We are seeing a wave of departures from MuleSoft. There's a lot of talk about whether MuleSoft can continue to deliver on the numbers that it's seen in past years. What do you make of that? Is that a red flag?
I think there's in organizations that are growing and dynamic and companies are coming together, there's always going to be change. But I like to zoom back and look at the landscape, what's going on. And this is why broadly, not just Salesforce or not just Twitter, this is broadly speaking why there are more technical CEOs being promoted into that job. And that's because in every industry, every company has to think about being a technology company and has to be a technology company. If you're the CEO of GM or Toyota, you're not competing as much with each other and other auto companies, you're competing with Tesla. If you're the CEO of any e-commerce company, or any retail company, you're competing with the e-commerce leaders like Amazon, and those are led by technologists. And I think that as the world moves more into this technology world we're all living through, having a technologist at the helm is a huge, huge asset. We're seeing it not in the companies we're talking about, but in the companies that we serve as customers of Okta. It's a strong trend I see continuing.
Totally understand why having those technical skills can be hugely beneficial. CEOs are also having to deal with major regulatory issues, global regulatory issues. Jack Dorsey is having to decide free speech issues, whether or not to kick the president off the platform. So I wonder if it can be at all a disadvantage not to have that kind of global view of a business.
The thing about the job is that you have to have many, many perspectives and you have to have many, many viewpoints. I think maybe in the past, one of the raps on technologists was that they were too narrow. They saw technology only and everything else was at the expense of technology. But all these people we're talking about being promoted into these jobs have a broad perspective on the different challenges and the different opportunities. And they're also good at building teams. Back to Mark and Brett, it's kind of the ultimate team building. Elevate someone to the CEO level and share that in terms of teamwork. There's strong teams behind these organizations, and you have to balance off a tech-centric world with all these broad issues you're talking about, and hopefully you get more decisions right than you get wrong. That's the best we can hope for.
Well, speaking of balance, Bret Taylor not only was promoted to co-CEO, 2 days earlier he was promoted to chair of the Twitter board. Isn't that a lot for one person if we're talking about taking things away like Jack Dorsey not being CEO of two companies in just one? Isn't that a lot for Bret to handle? He's a talented guy. And I think he can probably help each organization bring in the perspective of the other one, because one of the things you try to do on a board is build a board of diversity in terms of lots of different things, one of them being thought and experience. And I think when you think about building out a board, not only from the enterprise side, but from the social media experience side and the rest of the people on the board that can bring various viewpoints there, it's a strong board as well. Meantime, Okta is, of course, one of the biggest players in enterprise and identity security. Curious what's on your mind for 2022. Where do you think the biggest threats are?
Well, along with the rise of technology, we've talked about this trend and how it's never been more of a board level conversation and a CEO level conversation as to how companies are going to build new products, how they're going to take their existing products and move them online and make them more compelling in this competitive techno-centric age. Along with that comes security. So with the rising rewards that you can get from automating things and connecting them from a technical perspective, the bigger the risks are for security. So there's always a balance there. And I think another benefit of having technologists in the boardroom and in the top executive chairs is they have a perspective on some of not only the upsides of this technology, but the risks involved, because it's always about balancing. It's about doing the most with the assets at your disposal without exposing yourself to undue risk and managing that risk when it does arise.
So is ransomware, for example, still going to be as big a threat as it was in 2021 or bigger?
It's a rising threat. So 2021 has been really a marquee year for ransomware, and we expect that to continue. And that's mostly because companies have so much at stake online. They have so much at stake building these big businesses, building these big opportunities, connecting with their customers, with their supply chain, and that opens up risk. So companies at the same time are taking mitigation steps, and we as an industry are working hard to make sure that risk is managed and companies don't run into these unforeseen issues.
All right, Todd McKinnon, CEO of Okta. Great to have you back, Todd. Thank you for stopping by. Coming up, it is the twist no one expected, including Peloton. We'll have more next on their response to the Sex and the City reboot. And a warning now, spoiler alert, coming up. Meantime, Steven Spielberg's West Side Story reboot topped the U.S. box office this weekend, the musical making $10.5 million in its opening weekend, falling short, though, of forecasts, and it's just a fraction of what Disney spent to make it. The movie is aimed at older theatergoers familiar with the 1961 version and a younger audience, thanks to stars like Ansel Elgort and Rachel Zegler. This is Bloomberg.
beginnings. You look great.
Well, I feel great. Should we take another ride? Life's too short not to.
And just like that, he's alive. That was Peloton's very quick response to the new Sex and the City reboot, in which Chris Noth, who you just saw very much alive and well, was killed off after suffering a heart attack while riding a Peloton. That's no laughing matter. The ad also seems to suggest that he might have run off with his Peloton instructor. But we'll leave that to another conversation. Joining me now, Bloomberg's Mark Gurman, who covers Peloton, for more on all this drama. Mark, who wins here? HBO, Peloton, or none of the above?
I don't think anyone wins here. I think this has been a little bit, put out of proportion. The most interesting thing to me is the backstory, what really happened here. Initially, when we saw this scene in Sex and the City, the word on the street was that there was some sort of product placement agreement between Peloton and HBO or the show, but there really was no knowledge on the Peloton side that the bike was going to be used for the purpose of, killing off one of the cast members. Then today I see some stories that indicate that there was no deal at all, and HBO or the show had purchased the bike out of pocket and it wasn't provided by Peloton. So it's really unclear what exactly happened here. This was, however, I think a good retort from Peloton. I think that anyone who watches TV or entertainment, Hollywood, whatever you want to call it, knows that the person didn't really die in real life. It's just a TV show. So I do think it was blown a little bit out of proportion, but it does show you the potential health hazards for a treadmill.
Peloton, though, did, as I understand it, give their instructor permission to appear in the show. And I wonder if that was a mistake on their part, not getting all the details.
Yeah, I know. I think that comes down to contracts. What type of employee is this? What were the requirements? Did Peloton do their due diligence or not do their due diligence? Did the instructor know this was going to happen or not know this was going to happen? Why was there no communication between HBO and the show and Peloton afterwards? Why was there no communication between the instructor and Peloton? Is there going to be an issue between the instructor and Peloton? Probably not, given that she was in this ad. But I think this was this was quickly put to rest with this Peloton ad, and obviously it's quite good to get everyone involved in that. Obviously the Ryan Reynolds connection as well.
I was thinking maybe Ryan Reynolds or Chris Noth could be the winner here, and then, with Chris Noth getting killed off, I'm not sure he really wins if he's not in any of the other episodes. But that said, look, let's talk about how this plays into the bigger Peloton story. Yes, there's a difference between fiction and reality, but as you mentioned, the real, potential health risks at a time that Peloton itself is struggling to, maintain those big pandemic forecasts. How does this play into the bigger story? Will this have an impact on the business one way or another?
I mean, Chris probably actually is the winner here because he's getting money from both the show and this advertisement. So I agree with you on Chris. In terms of what this means for Peloton, well, this comes several months after we saw health hazards related to their treadmill. Obviously, this situation, I misspoke earlier, this was actually about the bike, but they had the issue where, a child was actually killed. There have been issues with pets and stuff and, young children related to the treadmill. So that still is top of mind for some people, given that the Tread Plus is still not back on sale. And then you have this, show showing, potential issues with the bike as well. I think long term, this is not going to have a negative impact on Peloton because people know or people are aware. And if they're not aware, they should be aware of the risks of any exercise equipment. This obviously has been an issue for years, issues with exercise equipment. So I don't think this is entirely new, and it's just a general part of society and the risk that comes with going to the gym or the risk that comes with using a treadmill or a bike.
I also wonder, though, does it hurt HBO? I mean, I watched every single Sex and the City episode. I hadn't gotten to the reboot yet, but now I don't know if I want to. I'm already depressed. Big dies.
I don't think it hurts HBO. I saw Succession last night. It was quite good, and I'm looking forward to season 4. I'm not a Sex and the City fan, so I can't speak for that. But they have plenty of good content that I like personally, so I think HBO is still a winner.
All right, Mark, thanks for having some fun with this one and us today. Mark Gurman, as always, appreciate it. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. I'm going to be speaking exclusively with Uber CEO Dara Khosrowshahi. You can catch that conversation 1 p.m. Wall Street time, 10 a.m. here on the West Coast. Then, a bit later on Bloomberg Technology, I'm going to be joined by Kraken CEO Jesse Powell and the CEO and co-founder of Rent the Runway, Jen Hyman, and Initialize Capital's Gary Tan.